Tuesday, June 29th. Market analysis, Stan Ehrlich. 9:55 California time, and slightly past the halfway point in the day. I start out with stock market indexes always, and the spider in particular has made another minor new rally high for the last 3 days. In fact, it's gotten up to almost exactly a very important price level I really didn't feel like mentioning in the last few days, but here it is on the way down from the overbought condition, which was in the middle of the month. We had the correction into a big support area, and it bottomed out so far. So we've had one day up to, and today, yesterday was very small, and today's not that big, up 1.5 points, but look at the high. It is almost exactly the bottom of a very small gap on the way down a week and a half ago. So if we close the gap with another push to the upside, then the next half an hour, then stop rallying and turn down significantly, probably to a lot less than a point higher, maybe even lower on the day. That would be very believable in terms of the gap finish closing on the rally, and bang, we're going to be heading down to where I think we're heading down to. 423 was also an old gap at the beginning of June. And here we are almost to the end of it. And that gap, again, 423. So right now at 38, we're looking at 15 points. That's not a heck of a lot, but it's going to take a few days probably. Okay, enough said about that. Then I'm still very, very bullish on the average period. I've said so for many months. In fact, since October 13th, when those of you who are new do not know that my Ehrlich reversal, ER buy signals, sell signals, got a buy signal on October 13th, the bottom of the market, the bottom of the bear market, the beginning of the 2023 bull market. I saw it coming in advance. I put it on YouTubes like this. Check it out the day of or earlier. After might be more interesting. So for the DIA, and I'm going to go through futures, by the way, in just a couple of minutes, we have also an old small gap from a couple of weeks ago that we have come up to the bottom of, and I'll zoom in a little bit for the DIA, which correlates with a resistance line. We did get above it for a day or two, but it dropped right back. Now we're back to there again. So if you can get up today or tomorrow, for example, at 342.65, that'll close the gap. And if it turns down, especially significantly after touching that approximate price level, I think it'll be headed toward the lows we have seen earlier this week, and new lows to close an old gap, which is for the DIA at my downside objective 332, almost exactly. Now, a quickie comment on the QQQs, which are very, very similar. They also have a gap to close. We have had a new rally high yesterday. The QQQs have not even made a high higher than yesterday. Spider DIA did. So we have some weakness here. We are actually lower on the day still by 1 full point. While the spider is up 1 1/4, which is not a lot, slipping slightly, and the DIA is up 228. And the Q's down 1, and everything at the moment is actually slipping a little quickly. Taking a look at the 1-minute charts. Yep, look at this. Last couple of minutes, we've seen a 0.5 point at least drop in the spider. It doesn't take much to start it to begin looking a little more bearish under 437.20, and that's 30 cents away. Okay, futures. I'm still bullish on the stock market, very much so. Whether this correction is all I was going to get, and I'm not going to get the gap closures I just detailed. That's okay with me on a long-term basis. I just didn't pick the lowest level that it was going to come to. I picked the turning point on the rally high. My break low wasn't as much as I thought so far. Futures. S&P E-mini is the same as the spider, so everything I've said basically stands for this chart as well, except that we do not get exactly the same signals in the E-mini because it has different trading hours, and you might get higher highs or lower lows, and or overbought some oversold conditions to appear on this index as opposed to the SPY. Next chart. Bonds are breaking down. Little bit of a surprise. I was kind of expecting we would see it rally through the resistance level, that blue line which stopped it 3 days ago. Yesterday's little rally looked optimistic, but no particular, major breakout or anything. And boom, today we are doing something damaging momentarily. A lot of support at lower levels, not expecting any particular bear market here. I just think this is maybe the result of some not good news ended up being like neutral, or neutral expectation ended up being a little bear, something like that. But I don't know. I'm not a funny mentalist, but I can see what I can see. Here we go. We're going to test now probably 125.10-ish, the previous low, and that was on May 26th. If that's broken, then we're probably going to go down to 22, 23 area. Now, that would be very important to hold. It's a much more important historical support level, which has proven itself since October. Below that, you've got the bottom of the market we had back in October and November. I'm not expecting that to be tested. Next, 10-year notes. Sideways trading range, totally breaking down. It's the first one to break down for a significant period of time. The bonds have not made new lows since May 26th. The 10-year notes have made now new lows since March 10th. So it's closer to its significant support level. It's not oversold. It's got a way to go before that. But if it does another day like today, we may get oversold and at the same time be at support. So I'm not going to be surprised if there's another quick, sharp break tomorrow, Friday, maybe, to test these support areas and maybe get to oversold conditions, I would hope. Next chart. Crude oil, basically still on the way down. I keep pointing out how important it is, bearish-wise, if we break below 64 and a half, call it, 64 will do. Again, on a closing basis, probably with a very sharp big down day as well. Bigger volume, blah, blah, breakout. It'll keep trending lower quite a bit after that for maybe months, I would expect. Next chart, heating oil, basically the same commentary. Formation is a big topping out type of failure to make new highs, a couple of shoulders, possible sloppy looking head and shoulder top. I really don't like saying that. Nah, there's too many parts missing, and what's there is not quite right. So I am bearish on heating oil, looking for those support areas to be broken, which are obviously extremely important from a longer term basis. Next chart. Natural gas has already done this kind of thing and is way down and flattening out, but the trend is still, okay, flat-ish to bearish. So I'm expecting the same thing, although I'm not looking for any huge, sharp, big break like we could find elsewhere. Next. Now gold is getting oversold, second day, not too severely, and trying to pop back up again somewhat. At least it's above yesterday's lows, but it's not above any particular number of previous closes and or yesterday's high. So no reversal yet. If, by the way, it were to be able to jump before the close above yesterday's high, which is not very far away, we will have a green bullish engulfing ER buy signal tomorrow. Next chart. Support from about a week ago seems to be hanging in there. Not great, but so far so good. We're a little lower in the day still in silver. And this is the one that has just been fantastically good for us. Buy signal on the bottom, March 10th. One of two tops is a bearish ER engulfing red sell signal. And the second one is the exact same thing. Both of which work really well. The second one was much better because, of course, it had a much bigger break after it. And what do we get at the end of it? A bullish engulfing ER buy signal. We had a rally for a couple of weeks, and that's gone. We're waiting for other signals. The trend is down recently. Downside objectives have been reached. Our lows a week ago are not in a particularly important support level of any kind that I can think of. So I'm looking for some new lows, maybe down to 21 and very possibly to 28.35. Next chart. On the way down, still in platinum, not stopping. We're still oversold now for how many days? Oh, quite a few. Over a week. And sporadically before that, this is just dropping quite a bit. We had a buy signal that worked for what, half a day? Not really. Easily could have lost a little, not much. And you could have made a tiny bit too, maybe. Too bad we didn't get a sell signal on top, but guess what? We got a buy signal on the bottom on February 27th. And now we are trading on a closing probable basis below that buy signal on February 27th, a significant low. What does that mean? Well, it's breaking down on a longer term basis, fairly obviously. Bull trend line for a few months has been broken. Big resistance area, very big broad one, has three major tops, two of which, by the way, we have bearish engulfings on the exact high day. That's why I built this trading system, to pick turning points to the day, which it does. I'm going to say 20-25% of the time. Next. Sell signal smack dab on top of natural gas, copper, HG. Buy signal here. Sorry, nothing. Short-term buy, yeah, a little bit of profit or nothing there. What now? Well, we're still heading down. This last overbought condition in around the resistance area too, pretty accurately, has stopped, past tense, a week ago. So are we going to keep plowing to the downside? Well, unfortunately, we're just entering oversold conditions, and we're getting close to that previous low that was back on May 24th, a month ago. So we might have a little double bottom for a short period of time. I don't see any long-term trend change. I'm just a little wary of the possibility of a double bottom, but I'm bearish. Can't help but be. You have to have occasionally and relatively often oversold conditions in a bear market. Next chart. Soybeans is a much different story. I'm going to start talking about something I haven't mentioned for a long time. This looks like it could be seriously bearish on a long-term basis if it cannot get above 13.13 on a closing basis. That level of around 13.13, give or take maybe a nickel or something, with the exception of the rally that we had back on June 10th of 22, a year ago. That is the only time period, June 10th, give or take a couple of days, of 22, when the market was able to get up to and above 13.13 and stay there. And it might be a little tiny bit different than 13. You know what I mean? And here we are, a couple of days ago, banging our heads against 13.13, 13.20 again, and kaput. We've made now a new low for the last few days. And yesterday was that new low. Today we're up just slightly, a rather feeble, if you want, bounce. So nothing particularly super bullish about this. I am expecting to see the support level at lower levels broken, tested, and broken very soon. We got soybean oil in a second. Now, that is profound because if I'm right, this thing is going to come down and hit these support levels. You're going to get some bouncing around on the way down probably. But this level here at 1065 is a major historical support level. And if that's broken with the tops around 13.13, let's call it 13.20, kind of average it out. And the bottoms at 12.10, 13, close to $2, or is that 200? 200. Down below 1,065. Yeah, about 180 or something like that. My head's failing me at the moment. Next chart is soybean oil. Overbought conditions yesterday, closed lower. Not a particularly bullish sign, but not necessarily bearish. Today we dipped a little bit. We're around unchanged at the moment. But the important part is it got overbought twice in the last couple of weeks in this area of resistance. And the first level stopped it for a day or two. And then yesterday stopped at the higher level. And these lines have been drawn for I don't know how many weeks. I think they've been drawn that long. And they look fairly profound, so they seem to be working at the moment. Now, the trigger here is at least closing at 54 and lower. That's the minor trigger, but getting, of course, below the low 49.60 is going to probably cause it to keep going down to test all the way to 42. Next chart, and then lower after that, likely. Next, we're looking at soybean meal. I'm going to speed things up a little bit. Rolling over, support's holding at the moment. Looks like it's in jeopardy. We just got overbought a few days ago. I'm expecting new lows. This little purple line at 350 is a rather substantial major support area, which could cause it to bounce, especially if you drop too fast and you get to oversold territory in the process. So bearish, looking for new lows. Next, corn. Another comment on a grain market that could have major long-term ramifications. This market just poked its head into new high ground for several months, only, and I'll zoom back out again, a few days ago. And this high was right up against a previous high and a little higher than October 10th of 22. So for over 6 months, about 8, we have resistance stopping it cold in overbought conditions. And look at the size of this break. That's a bit more than I would have expected. And in fact, we're already not too far away from oversold. So if we keep going down like this, and I don't think that's likely, so I'm looking for a low in the next couple of days, maybe down to 503-ish. And then we got the bull trend line to be aware of, and that's at 485. So looking for lower levels, but watch out, we're getting a little bit closer to over. If you were short, I'd be lowering my stop, that's for sure. Next chart. Wheat bumped against resistance and did stop. And now we're starting to make, again, after 2 good down days, another minor new low and a little slight bit higher on the day at the moment, hardly worth mentioning, a few cents. Just can't seem to get its rear end in gear for a rally at the moment. We did not really get oversold this last drive down yet. It was coming out of an overbought condition only 2 days ago. So I think we're going to be heading Tierra del Fuego again south, and we're looking for new lows below 585 pretty soon. Next chart. And we sold the high of the rally in the cattle market, which is still the high day on the rally. And this whole big swing up in beef looks very much like a blow off top so far. This rally is a little bit much more than I expected, but maybe it topped out yesterday. It's not really acting like that at the moment, high and last, and a little bit higher on the day. But it's a doji, it's an inside trading range, which is kind of a neutral analysis of a doji. I've still got the sell signals, and I don't mind a rally, but it's just a tiny bit more than I thought. Next chart, and I'm looking for new lows. Next, live hogs oversold at the bottom, and we just had a few days ago a bearish engulfing sell signal, which hasn't been violated. Although I must say, the rally we have had, what am I doing here? Just a second. The rally that we have had in the last couple of days, this is a new high close probably, and maybe a squeak in a new high ground. So I'm in jeopardy of being outright wrong. It certainly, if it hits the yellow dot or higher, then I am out, but I would have been out probably already with a small loss. And there was a chance of a small profit, but not much, about 3-4 days ago. Okay, next was OJ might be building a top. We need to break below 233 in order to cause me to be a little more convincing. Every time we have seen overbought conditions for the last 4, 5, even on a short-term basis, 6, 7 times, we've seen a good break. Well, that has happened already. It bottomed out a week and a half ago. Now it's just plain going sideways for a couple of weeks. I need a little bit of a rally to clear some recent highs, or the opposite, to perpetuate a big question mark at the moment, frankly. So that's what I'm looking for, is a minor upside or downside breakout to make some more intelligent comments. Next, cocoa, overbought. Don't chase overbought markets. Up, down sharply today. Probably is coming off to about 3,036-ish, and may take about a week to do it. Next chart is cotton the rag. We're at a support level the last couple of days, and guess what? We're oversold at the same time. That spells the beginning of a rally, which I've been alluding to. And today we're just a little bit higher in the day, not much, but at least it's a new high closing price for the previous 3 days and above yesterday's high. So a little bit of friendly activity, I will put it that way. Coming out of support and oversold, looking like it could rally back up to the high of the trading range. Why not? 85-ish again. Next chart. Soy sugar the sweet has almost reached my minimum downside objective in 3 days. I talked 3 days ago about this double topping out, the measurement that I took, the breakout point that was right there, and then the downside objective here. And this is a beginning chart. It's been exactly untouched for 3 days, and except for the updated price. And bing, bing, bing. So we are at my downside objective for all practical purposes. Done. But as I said, hey, even though we're oversold for 3 days in a row, which does imply that we should bounce any old time, there is no support here other than the dumb downside objective, which is not a support or resistance area. It's just an objective. They're different. So the real support area is 20.50. And if we get there fast, we're going to be very oversold. And I would expect a big bounce. But we'll see what happens. But for right now, there's a good chance it's about to rally a little. Next is back to E-mini. You guys have a great day. Talk to you tomorrow.